What's the actual process you go through? Like literally, like the process of figuring out what the value of a company is. Like how do you do the research?
Mhm.
Is it reading documents? Is it talking to people? How do you do it?
It's all of the above. So Chipotle, what attracted us initially is the stock price dropped by about 50%. Great company, great concept. Athletes love it, consumers love it. Healthy, sustainable, fresh food made in front of your eyes. And great. Steve Ells, the founder, did an amazing job. But ultimately, the company's lacking some of the systems and had a food safety issue. Consumers got sick, almost killed the brand. But the reality of the fast food quick service industry is almost every fast food company has had a food safety issue over time, and the vast majority have survived. And we said, look, it's such a great concept, but their approach was far from ideal. But we start with usually reading the SEC filings. So companies file a 10K or an annual report. They file these quarterly reports called 10Qs. They have a proxy statement which describes kind of the governance, the board structure. Conference call transcripts are publicly available. It's kind of very helpful to go back 5 years and kind of learn the story. Here's how management describes their business. Here's what they say they're going to do. And then you can follow along to see what they do. It's like a historical record of how competent and truthful they are. It's a very useful device. And then, of course, looking at competitors and thinking about what could dislodge this company. And then we'll talk to, if it's an industry we don't know well, we know the restaurant industry really well, music industry, we'll talk to people in the industry. We'll try to understand, the difference between publishing and recorded music. We'll look at the competitors. We'll read books. I read a book about the music industry or a couple books about the industry. So it's a bit like a big research project. And there are these so-called expert networks now, and you can get pretty much anyone on the phone. And they'll talk to you about an aspect of the industry that you don't understand, want to learn more about. Try to get a sense. Public filings of companies generally give you a lot of information, but not everything you want to know. And you can learn more by talking to experts about some of the industry dynamics, the personalities. You want to get a sense of management. I like watching, podcasts. If a CEO were to do a podcast or a YouTube interview, you get a sense of the people.
So in the case of Chipotle, for example, by the way, I could talk about Chipotle all day. I just love it. I love it. I wish there was a sponsor.
I'll mention it to the CEO.
Don't make promises you can't keep, Bill.
I'm not making it. Right. Brian Nichols is a fantastic CEO. He's not going to spend $1 that he doesn't think is the company's best interest.
All right. All I want is free Chipotle. Come on now. What was I saying? Oh, and so you look at a company like Chipotle, and then you see there's a difficult moment in its history, like you said, that there was a food safety issue, and then you say, okay, well, I see a path where we can fix this, and therefore, even though the price is low, we can get it to where the price goes up to its value.
So the kind of business we're looking for is sort of the kind of business everyone should be looking for, right? A great business. It's got a long-term trajectory of growth out into the even beyond the foreseeable distance, right? Those are the kind of businesses you want to own. You want businesses that generate a lot of cash. You want businesses you can easily understand. You want businesses with these sort of huge barriers to entry where it's difficult for others to compete. You want companies that don't have to constantly raise capital. And these are some of the great businesses of the world. But people have figured out that those are the great businesses. So the problem is those companies tend to have very high stock prices, and the value is generally built into the price you have to pay for the business. So we can't earn the kind of returns we want to earn for investors by paying a really high price. Price matters a lot. You can buy the best business in the world, and if you overpay, you're not going to earn particularly attractive returns. So we get involved in cases where a great business has kind of made a big mistake, or you've a company that's kind of lost its way, but it's recoverable. And we buy from shareholders who are disappointed, who've lost confidence, selling at a low price relative to what it's worth if fixed, and then we try to be helpful in fixing the company.
You said that barriers to entry, you said a lot of really interesting qualities of companies very quickly in a sequence of statements that took like less than 10 seconds to say. But some of them were fascinating. All of them were fascinating. So you said barriers to entry. How do you know if there's a type of moat protecting of the competitors from stepping up to the plate?
I mean, the most difficult analysis to do as an investor is kind of figuring out how wide is the moat,
Mhm.
how, you know, how much at risk is the business to disruption. And we're in, I would say, a period, the greatest period of disruptability in history, right?
Mhm.
Technology, a couple of 19-year-olds can, leave whatever university, or maybe they didn't even go in the first place. They can raise, millions of dollars. They can get access to infinite bandwidth storage. They can contract with engineers in low-cost markets around the world. They can build a virtual company, and they can disrupt businesses that seem super established over time. And then on top of that, you have major companies with multi-trillion dollar market caps working to find profits wherever they can. And so that's a dangerous world in a way to be an investor. And so you have to find businesses that it's hard to foresee a world in which they get disrupted. And the beauty of the restaurant business, and our best track record is in restaurants. We've never lost money. We've only made a fortune, interestingly, investing in restaurants. A big part of it's a really simple business. And if you get Chipotle right and you're at 100 stores, it's not so hard to envision getting to 200 stores and then getting to 500 stores, right? And the key is maintaining the brand image, growing intelligently, having the right systems. Now when you go from 100 stores to 3,500 stores, you have to know what you're doing. And there's a lot of complexity, right? If you think about your local restaurant, the family's working in the business, they're watching the cash register, and you can probably open another restaurant, across town. But there are very few restaurant operators that own more than a few restaurants and operate them successfully. And the quick service business is about systems and building a model that a stranger who doesn't know the restaurant industry can come in and enter the business and build a successful franchise. Now, Chipotle is not a franchise company. They actually own all their own stores. But many of the most successful restaurant companies are franchise models, like a Burger King, a McDonald's, Tim Hortons, all these various brands, Popeyes. And there it's about systems. But the same systems apply whether you own all the stores and it's run by a big corporation, or whether the owners of the restaurants are sort of franchisees, local entrepreneurs.
So if the restaurant has scaled to a certain number, that means they've figured out some kind of system that works. And
Yes.
It's very difficult to develop that kind of system. So that's a moat.
A moat is you get to a certain scale and you do it successfully, and the brand is now in the understood by the consumer. And what's interesting about Chipotle is what they've achieved is difficult, right? They're not buying frozen hamburgers getting shipped in. They're buying fresh, sustainably sourced ingredients. They're preparing food in the store. That was a first, right? The quality of the product at Chipotle is incredible. It's the highest quality food you can get a serious dinner for under $20, and eat really healthfully and very high quality ingredients. And that's just not available anywhere else. And it's very hard to replicate and to build those relationships with, farmers around the country. It's a lot easier to make a deal with one of the big, massive food producers and buy your pork from them than to buy from a whole bunch of farmers around the country. And so that is a big moat for Chipotle. Very difficult to replicate.
And by the way, another company I think you have a stake in is McDonald's.
No, we own a company called Restaurant Brands. Restaurant Brands owns a number of quick service companies, one of which is Burger King.
Burger King.
Yeah.
Okay. Well, it's been a meme for a while, but Burger King is great too, Wendy's, whatever. But I usually go McDonald's. I'll just eat burger patties. I don't know if you knew you could do this, but a burger patty at Burger King can do this. McDonald's, it's actually way cheaper.
They'll just sell you the
patty, and it's cheap. It's like $1.50 or $2 per patty, and it's about 250 calories, and it's just meat. And despite like the criticism of memes out there, that's
pretty healthy stuff.
It's healthy stuff. And so the healthiest I feel is when I do carnivore. It doesn't sound healthy, but if I eat only meat, I feel really good. I lose weight. I have all this energy. It's crazy. And when I'm traveling, the easiest way to get meat is that.
So you go to McDonald's, you order 6 patties.
Exactly. So there's this sad meme of me just sitting alone in a car when I'm traveling, just eating beef patties at McDonald's. But I love it. And you got to do what you love, what makes you happy. And that's what makes me happy.
We'll have Burger King feature in it. What about flame broiled? What's with these fried burgers? We got to get you to Burger King, grilled burgers.
Wait, is this like fast food trash? I didn't know. I don't know the details of how they're made. I'm not.
Ah, it
I'm
should.
not. I don't have
I
allegiance
think
to
we got a chance to
McDonald's.
switch you to Burger King.
Great. We'll see. I'm making so many deals today. It's one.
In conclusion, as Bill Ackman eloquently illustrates, investing in companies like Chipotle entails a thorough understanding of their business model, competitive advantages, and potential for long-term growth. Ackman's insights shed light on the meticulous research process involved in assessing a company's value and its moat, emphasizing the importance of scalability, brand integrity, and operational excellence. With his characteristic enthusiasm, Ackman's discussion extends beyond finance to personal habits, showcasing his pragmatic approach and passion for finding value in unexpected places.